Well, today I want to cover the top stocks to sell options on. For me, as an option seller, half the battle is getting the right stock. Once you've got the right stock, then I find that the trade works out so much easier. So that's what we're going to focus on today. First up, not financial advice. This is simply what I'm doing and have done based on my own individual goals and risk profile. Don't copy random strangers on the internet. Do your own research, make your own decisions, and get good at managing your own money. So, today, what I want to cover is getting to understand the other side of the trade, i.e., the buyer. Because when we can understand who's buying what we're selling, we can really get to know what we should be selling. I want to cover the implied volatility decline, i.e., why all of a sudden there's no premium left in your favorite stocks. The wheel trap, which is why I really try my hardest to not get assigned on put options. I don't want to be assigned. And then finally, the only stocks to sell options on, in my opinion at least. Firstly, though, I want to just quickly introduce you to the 50K Club. So the 50K Club, it's a group that I've now got on School, and it's the place for options traders to create a consistent monthly income if you don't have a huge seven-figure account. In my opinion, we need different strategies. We need strategies that can give us quick wins that doesn't tie up capital for a really long period of time. So if you would love to join us, the first 50 members receive a founding price of $50 each. And so far, we've got 16 members, which I'm really excited about. So take a look at that if you're interested. The link is in the description below. But let's dive on in firstly to put options, right? So we need to understand who is buying this thing that we're selling and why they're buying it. So there's two people that buy our put option. Number one, the person that wants to lock in gains, right? Because what happens when we sell a put option? We are committing to buy someone else's gain at a certain at a certain price, right? So if they've bought their stock for $50, it's now trading at 120. They might want to lock in at, call it 110. So by buying our $110 put option, they're locking in those gains from where they bought to the 110, right? The other person who buys a put option is betting that the market will drop because the option that he buys will increase in value as the market drops. Now, the other side of the call option trade is quite literally someone betting that the market will rise, right? Because the only way to profit from a call option is if the market rises, either by the fact that your option is now worth more or by the fact that you get to exercise that option and therefore buy stock at a price that is lower than what it's currently trading at, right? Now, with that in mind, when a premium's high, when there's a lot of demand, right? And we want high premiums as options trader. So let's look at when the demand is highest so that we can understand when we want to be selling these options. So to do that, let's come on into the charts. Now, I want to give this example using Robinhood because Robinhood had a huge run up last year, and since then, it has had a huge decline, right? If you've been trading Robinhood, and if you were trading Robinhood last year, you would remember that there were awesome premiums to be had, right? I was looking through past trades of mine, and through this period of time here, this run up, I was selling put options at 4% return for a 2-week trade. Amazing. Now, why were the options so high? People will tell you because implied volatility is high. Well, yes, that's part of it. But also, I don't believe that we need to go searching for what is the implied volatility or necessarily, probably an unpopular opinion, even understand it, right? What we need to understand is when the stock is rising, if I bought it down here for $60 and now we're trading up here at $100, I've got some gains to lock in. Now, I might believe that the stock's got further to go, but I'm getting a bit nervous and I might want to buy a put option as protection to lock in those gains. So every time that a stock is in an uptrend like this, People are buying put options to protect their downside, right? Also, when do we buy call options? When a stock is in an uptrend. Because an uptrend is we have a couple of, corrections, we go up again. We have a couple of corrections, we go up again. So people are drinking the Kool-Aid, they want to be in on it, they don't want to miss out. They're buying their call options, right? The other thing that happens at the same time is when we're at all-time highs, which we are all throughout an uptrend like this, right? The bears are always betting it'll end. It'll end. This has to be the top. So the bears are buying the put options to bet that the market will drop, right? Or as protection in their portfolio. They might not even own shares of Robinhood, but they see that markets overall are at all-time highs and they decide to buy their protective portfolio put option on the stock that's riding so high. But either way, what can we gather? Everyone's buying through here. Now, on the flip side, and the reason why we don't want to get assigned on a put option to own the stock in the downtrend, and the reason why the premiums drop is, especially once we lose significant moving averages like the 150 or 200, when we're trading down here, who has gains to protect? Not many people, right? Because if we're trading on, let's call it this day here at 90 odd dollars, the only people with gains to protect had to have bought it before it got to $90 on the way up. Everyone who's bought it since is already in a loss. So they aren't buying a put option to lock in gains. Conversely, anyone who bought when it was lower than this price on the run up here, if they're not out, if they hadn't already bought their protective puts, they're probably fine just to hang on to that thing and ride it out. So there's not that frenzied rush for people to buy a put option. Plus, when we've dropped so far already, the bearish bet is kind of starting to get more risky, right? Because we've already had a significant drop. So the put option buyers who are betting the market will drop, they're stepping back a little bit too. Okay. So there's no is the wrong word. There is little premium to be had once we've dropped. So this is exactly why you see when you're making your decision to get assigned on your put option up here, and you're like, yeah, that's fine. Premiums are great. I'll just sell a call. Premiums are great. And then you own that stock for a period of time in the decline, and all of a sudden the premiums have totally dried up on the call. It's for the same reason, right? When do we buy call options? When it looks like we're on the mend, when it looks like we're already moving upwards. Call option buyers aren't typically buying, in mass at least, at these levels. Why? Because to make money out of that call option, you need a fast rise. So if we're selling a call with a 14 or a 30 DTE, the person buying that needs to believe that the price will be substantially higher. And when we're in an upward trend like this, it's very easy to believe that. When we're in a downward or a sideways trend like this, it's very hard to believe that. So the buyers evaporate, right? I hope that makes sense. It's, for me, in my opinion, it's always supply and demand. If I own these stocks at this price, who will want to buy the call? And generally, if we're in a sideways or a downwards trend, the answer is less people than if we're in an uptrend. And because it's literally a bid, right? There's the buy, there's the ask. So as a seller, we can ask for more when buyers are prepared to pay more. We can't ask for more when buyers aren't prepared to pay more. Okay. So that's why, for me at least, when people say, oh, just take assignment and just wait for the stock to come back, sell calls and wait for the stock to come back, that's why I don't really love that strategy, because the premium is low if this happens. So, not just Robinhood, you would have seen it on Palantir, SoFi, a lot of the software stocks that have had this kind of a drop as well. Okay. There is a way to ultimately try to avoid all of this. And so it comes back down to asking the question of, what do we trade? Uptrending stocks only. This has been my biggest, I hate to use the word unlock because it reminds me of AI, but it's been my biggest unlock in trading, is something as simple as only trade the uptrending stocks. You get more premium, obviously, and as soon as you get more premium, there's actually less risk, right? You're trading, forgot my A, you're trading with the trend. If we are in a bullish trade, which selling calls, selling puts is a bullish trade, if we're trading stocks that are trending upwards, that's less risky than trying to bet on where the bottom might be on a downward trending stock. Plus, there's less premium in that downward trending stock as well. So again, there's more risk in that. So there's less risk in trading with the trend. And here's another key for me. We're traders, right? We're looking to get the money out of the market in as short a period of time as possible with as less risk as possible. So we don't need to buy value, right? All we need are quick wins on our capital over and over and over again. We don't need to find SoFi's bottom. We don't need to find Robinhood's bottom, because we just want the most likely win in the shortest period of time. For me, buying value, that's great for investing. You know, if you're looking at some of these stocks and you're like, wow, they're so cheap now, I want to buy them and put them in your bottom drawer portfolio, right? Where they just sit there, and in 2 years, in 5 years, in 10 years, they're worth a bunch more. But as traders, I strongly feel like we don't need to guess the bottom. There are always stocks doing what we want to do. We just need to find those ones. So I do hope that that was helpful. For me, it has always helped in understanding what the other side of the equation does. And once I understood, oh, now I can see when people do and don't buy what I'm selling, it made sense that the premiums are less when the stocks are down, that the premium is high when the stocks are up. I don't need to fluff around trying to figure out, oh, is this a good IV? Is it a high? Is it a low? Or anything like that. All I do is look at, is the stock going up or is the stock going down? And that's literally my barometer as to, do I trade this or not? So I hope you found that helpful. Again, if you're interested in coming into the 50K Club, I'll leave that link below. I've also opened new places in my 12-week mentorship, where I will go really deep with you, with your strategy, with what you're looking to do, and tailor some strategies and some processes specifically to you and your account. I'll leave that link in the description as well. If you have any questions, of course, you are always very welcome to reach out.